It's important for me because I've always worked within a bubble. Intellectual property space as a market, as a business, is a small world. There's only a few conferences that most anyone in the IP business in the corporate world goes to. There's a single conference that everyone in technology transfer in the university world goes to called the Association of University Technology Managers. But it's important to me within campus that you understand kind of who I am. Also, I think this will help give a little context around the way that I see what I want to do with the office. I started my career as a lawyer with Wyatt Tarrant & Combs in their Louisville office. I was doing corporate M&A, transactional work. I went from there to the entrepreneurial route, started a company called IPXI based in Chicago. We were doing technology transfer, intellectual property licensing. We worked with global technology companies, universities, national laboratories. And then the concept there actually was to develop a marketplace for doing this, or a market price. Ultimately, we ran the company for about 5.5 years. We're not successful in becoming the world's renowned and central marketplace for IP as we had hoped. Really actually just speaks to the need for what our office and offices like ours does. The point being there is no central marketplace in which you can just put your IP or technology into and hope somebody will partner with you. It's a focused effort. It requires focused research, nuanced research, and that's what our office purports to offer. Lastly, I went to Blackstone IP, an investment bank. So I went from the entrepreneurial route to an investment bank working at the other end of the spectrum. If you think about intellectual property transactions, technology transactions, there's early stage research and beginning of the market, emerging market technologies. Then there's sort of the mature part of the market where there's big companies and they're doing M&A acquisitions for technologies that have been not only incubated, but they have proof of concept around prototypes, even products and sales. So I was doing those deals, but very technology focused. And that's where I came from all the way back to the beginning of the spectrum, which is where we are now. A snapshot of just some of the companies I worked with at Blackstone IP. I do show this only because I think it's important to get perspective of I've worked in the corporate world with some of the most sophisticated IP companies out there. What they do might seem so far off from some of the motivations and things that we'll do, but actually they're quite related and they impact one another. The importance with which these companies see IP and the reasons that they look at IP or the reasons that they and motivations that they consider when they think about taking a license, a lot of that actually reflects on the same motivations a startup would take a license from us. If none of these companies think IP is important, neither would a startup who wants to try to commercialize some IP out of a university. So I provide some context around that. Final piece of context just on my background is that this is sort of my laboratory, right? This is, I think about thought leadership and IP strategy, technology transfer. I've published a number of articles. So this is where I do a lot of my own research. And I hope you kind of respect that, just like I want to respect everyone's subject matter and where you do your research. Because I truly feel that this is not sort of an administrative function that we offer. I want to be benchmarking and always trying to offer this as a resource to our research community the best way we can. So I like to talk a lot about sort of just what I call renewable research. Some people draw a life cycle, a circle, when they talk about going from research to IP to economic return back to research. And so it looks as if you're just kind of going around this cycle and it goes back into the same research you were doing. Instead, I like to draw a waterfall, really, because it's research to IP to economic return back to new research. The whole point of the patent system is to publish patents and actually incentivize doing new research based on those published patents. So how do we get there? How do we create kind of renewable research? Well, first I'd like to just talk a little bit about why it's important. First, the bond between research to IP. And then I'll talk about the other two bonds, IP to economic return and economic return back to new IP, or to new research. This is just a snapshot, as you can tell, as intuition would tell us. As you spend more on research expenditures, you might have more invention disclosures. That seems fairly intuitive, right? We spend more on research, there's more things being done, more inventions being disclosed. But as intuition may not tell us, this is a snapshot just from some statistics in 2015, a survey taken from the Association of University Technology Managers, Autumn, that I mentioned. What you'll see is as year-on-year increases in research expenditures and disclosures were around 5%. We actually had 3 times that as an increase in new patent applications filed and then licenses and options executed, both around 15%. And you ask kind of maybe what does this tell us? Well, this is not just sort of a 2015 occurrence. This is something that has been occurring, frankly, over the past 35 years or so. As we look at sort of as we've become an innovation economy, there's been some really interesting things happening. The first of which, if you look at the red lines and frankly the sort of disparity between the 2 red lines here, evidencing really the ratio of patents filed to GDP. So as GDP has gone, here we are on this bottom red line here, patent filings have gone, and actually that ratio has grown. So over the past, and really since around, if you look kind of at this point, 1975-ish, that disparity has grown and grown. So the ratio of patents filed to GDP has increased since 1975. Well, I've put this graph, this little graph here behind that to show sort of just some corroboration of this, right? If you want to understand sort of why this is happening. A really interesting study was done by a merchant bank called Ocean Toma. Has anyone seen that study by Ocean Toma? Really interesting firm based up in Chicago. Well, they poured through a bunch of data, annual reports, securities filings from S&P 500 public companies dating back to 1975. And then basically what their study evidenced is that we've done an inverse around the same period where we started to see this growth in that ratio of patent filings to GDP. We've seen an inverse in the attributable value of these S&P 500 companies from tangible assets to intangible assets. So now, 1975, only about 20% of those companies could be attributable to intangible assets. We've got the inverse now. We've got about 80% of the S&P 500 attributable to intangible assets. A greater thing than intellectual property. You know, intangible assets would be this umbrella under which intellectual property lies. But that just provides some context around the importance of intellectual property that continues to grow, even at a faster rate than the growth of research expenditures and the growth of even invention disclosures, so inventions that are happening. You can't read all of this, and I wouldn't expect you to, but I'll draw out a couple of main points, and this just takes us to the next bond from IP to economic return. Some empirical studies that we've seen finally in the past 10 years or so on the importance of patents to startup companies have basically proven that, first of all, there's been a higher IPO value. So companies that go IPO that have patents, they have a higher IPO value on average. After that IPO, they have a better aftermarket stock performance if they have patents. Interestingly, quality matters, interestingly or intuitively. If you truly understand patents, just having patents or a lot of them is not really part of the game. Having good patents, quality patents, is the most important part of the game. And in our setting, where we have to convince investors to invest in startup companies to commercialize things that happen, investors are smart. They also have lots of money to do the right type of diligence on the patents that we file. And yes, they'll find out if they're quality patents or not. Because if they're not, they know that a company like Google will also know that they're not because they have the same resources to do that diligence, and they won't care about them. So they have to be quality patents. A snapshot that I wanted to show you guys is a company that I actually worked with, and it truly evidences the importance of IP at an early stage, and what that has done for a startup company that took a license out of university and actually turned that into millions of dollars in value. I don't know if you've heard of a company called MC10. They do some really interesting healthcare sensing and informatics technology. They started with a license of some foundational technology right out of the University of Illinois, physics-based, sensor-based technology. They used that license to then get some seed capital, the first step that a startup company with some foundational technology, no proof of concept or sales yet, but they went and got some seed capital. With that seed capital, they went and got more IP and actually did some product testing, prototype building. Because they did that, they finally got $61 million in funding. There's no way they could have gotten there without this license, and there's no way they could have gotten here without this capital, but this capital only came because of that license. And this $61 million in additional funding, rounds A, B, C, D, E, happened because they grew this. Now, the more IP continued to grow to patents, right? So some companies wouldn't do that. They would just kind of maybe exist on that license, the original foundational technology, and then they go straight into products. Well, they continued to innovate using this foundational technology as their nugget, their seed, and they've raised, obviously, tons of money. They've grown a really, really good patent portfolio, which, fast forward, has grown into multi-millions of licensing value in their portfolio. Now, what's next is an arrow to a company called GoPro. And I've drawn this ring around it because GoPro and some other companies are companies that formed as a startup and grew and did products, and they did fine. They did great. And they're products that we know. The issue is they weren't a company that was founded in a foundational technology. And as a result, later in the market, when they had to defend their products against companies that were quite innovative in that space well before they were, they suffered. And I can't tell you details of how or why, but there have been licensing deals where they have been forced into because they did not have the foundational IP that a company like MC10 did from that license. This is evidence of why the licenses that come out of the University of Kentucky are so important to a company like MC10 or any other startup or other company that needs it, because what we do is foundational technology. Right? The importance of university tech and the stuff that comes out of our labs is they are the building blocks, the nuggets, and that license, by the way, was 12, 15 years ago, and this is where this company is today, right? GoPro is a company that entered the market and became huge in a matter of a couple of years, but they did so without the necessary IP, and their profit margins have really suffered as a result. It's important to understand that if we take sort of the corporate context and the importance of that IP in the corporate context and move it back to UK, of how we get from that economic return, as evidenced rare in a company like MC10, back to, in that case, University of Illinois, or in this case, of course, the University of Kentucky. What exactly does that mean? How do we make that directly tie into more research? Well, like all universities, we've got an income distribution policy where we reap what we sow, basically, right? So 100% of the income that comes in, we have a distribution policy like any other universities, one that we will make more transparent as an office going forward, where 40%, quite generous, goes back to the inventors themselves. Another 40% goes to the college or the department separately. So 80% of anything that is derived goes basically back to research, unless the inventors want to go buy a Ferrari. But that's kind of the waterfall. Here we are looking at directly income from that economic return right back into additional research. And that's why it's so important. Last year, to the tune of $2.5 billion in license income back from university research. So if we were to benchmark sort of where we are as an office and as a university today, these numbers here across the top are our fiscal year 2016 last year stats. We had over $250 million in research expenditures, 53 disclosures to our office, 17 patent applications, 30 new patents issued, not tied, of course, to the 17 patent applications. The 30 patents were issued. Those were applications over the past 4 or 5 years, as it takes some time to get patents issued. We did have a fantastic year in licensing revenue, quite an anomaly, probably, and we will head right back down to our average around $1 million going forward, most likely. One thing that was new for us, however, that I think can be sustained is the startups. We had 8 startups as a university, licenses to startups last year. That's actually quite high among universities of our size, and something that we hope to continue moving forward. As we sort of try to benchmark that against other universities and based on stats that have been reported to Autumn, the U.S. average for disclosures and research expenditures is about $2.5 million of research expenditures on average per disclosure, based on a study done for the past 25 years or so. And ours was around 4.7 million. That's not to say we're wasting money. I think it's actually to say that our office, as an office, can do better being visible, making ourselves available, and offering better resources to make sure that things that are happening, innovative things that we know that are happening in our labs, are disclosed to us so that we can help. And we can help procure patent protection and do commercialization. The next important stat to look at is that of those disclosures, on average, over 25 years, all other universities, about 55% of those disclosures were turning into patents, or patent applications, I should say. Whereas, based on our stats in the last Last fiscal year, it was only about 32%, which tells me that of our disclosures, they're not, on average, they're not turning into patents at the clip that they have been at other universities, meaning really just our disclosures are not of the same quality. Again, I don't put that on the university and the researchers. It's the resources that I think our office can offer to make sure that the disclosures are not just around something novel, but something novel and useful. And we make it more of a pitch, because to procure patent rights means more than just something is new. It means it's new and useful, has some commercial application, and we want to make sure that in that disclosure process we're thinking about those things. As we look at some trends just of these disclosures, patent apps, what's interesting, and if you can't see those, the key along the top, the two lines to really kind of look at is this line, which is quite interesting as those are, as a university, our disclosures. We had this big spike in 2014. Patent applications followed them a little bit in 2014. A much larger gap between what was disclosed and what was filed than there was in the year before in 2013. That was, we had a year where we had like 20 additional disclosures out of the College of Medicine, and we're trying to put our hands around that, around why that happened, and then we went back down. But for the most part, our disclosures, are between 50 and 60 a year on average, and the applications other than that year have sort of followed it. The interesting thing out of all that, though, if you look at those as a constant, our revenues, as I mentioned, we hit an anomaly last year and went back up. We'll probably head back down here. But what we like is the patent applications to be about 1 ring up and the disclosures to be about 5 rings up. Because if we look at our averages, we should probably have about double the disclosures that we currently do, which means at about a 55% rate of disclosure to patents on average, we should have about double the patent applications that we do. So if we take this in context, or out of context, and then put it into sort of why we want to do a few things for the office, first is just kind of how we look at ourselves going forward. One picture we want to paint is just that we are a service provider and we offer many services. Frankly, as an office, we're quite busy along this spectrum. We want to be transparent about our commercialization process, starting with research. And we look at each of these steps, these blue boxes, as kind of how we want to usher each invention disclosure through this process. And as we move to each box, we view ourselves a little bit differently. With research, and as the research is going on to be disclosed, we want to be sort of a teacher or an educator about the type of literature and better research that can be done to disclose better to our office. As a patent office, again, as you disclose to us and we make a decision about patent filing, we do want to operate like an efficient patent office with multiple patents and patent cases that we're handling at any given time. The evaluate and then go to market process, we want to act like an investment bank. We want to make informed decisions about how to go to market, should we go to market based on real market research, some valuation, other capabilities that I'll show in a minute that we're developing for the office. And then from there, we're a law firm. We negotiate licenses on behalf of the university and the inventors. We collect royalties and distribute them, and then we want to carefully audit those licenses. Something importantly, we want to focus on to make sure that of the licenses that we execute, we don't just say kind of bye-bye and we'll see you when you report your royalties to us, but we're tracking them. And we're developing a relationship with those licensees to make sure that they know that we're watching. And we want them to be proactively putting our technology to work. A new mission statement of the office focuses on commercialization, not just for the university, but for the Commonwealth of Kentucky, and then for global society, because what we're really doing is not trying to bring in money, we're trying to put our technologies for public use. And it's truly about the public use aspect that allows us to even own the patents under the Bayh-Dole Act, a federal act that's sort of a compromise that says we'll fund all your research and we'll allow universities to own the resulting IP as long as you're doing something for global society with that technology. To get there, though, in order for that to be our mission statement, we realized that we had to develop new capabilities of the office. These bullets are some of those capabilities that we want to add. We want to add the ability to do better patent literature research to accompany the academic literature and the technical research that the inventors are doing. Valuation, so when we look at a commercialization strategy, we understand that it's not a one-size-fits-all. The technology offering that you can pitch to any given company is not the same. Every company has a different operating margin. They have a different manufacturing process. To retrofit one machine is perhaps a different cost to retrofit a different one. Business development, data analysis. We want to build better data so we can look at perspectives, look at things like our portfolio from different perspectives. That's going to be important. Client service is a big one. We want to view sort of our inventors as clients and adopt truly a customer service mentality. I mentioned some of the capabilities that we want to add, like the patent research. We've already acquired new tools, new research tools as an office to do more research around the patent landscape from things that are being disclosed to us. So we understand that our inventors and researchers are quite good, way better than we could ever be at the technical research part and looking at through the academic literature and understanding that what they have come up with is new and not in the current academic literature. But we also understand that looking through patent literature is a little different. And most companies that have very prolific inventors in their R&D facilities have zero incentive to publish papers and every incentive just to publish a patent. And so lots of things are being invented and published in the patent literature, and we need a way to sort of look through that quickly to make our disclosures better. So as things are disclosed to us, we're going to use these tools to come up with ways to look at the patent landscape, and this is a very kind of basic look at sort of the machine vision patent landscape. Who are the companies that might have parts of that landscape by volume? But then we can take that information, the volume sort of who are the companies in the landscape, and then couple that sort of patent volume information with things like revenues derived from relevant products and litigations entered into and locations of their offices. And you can start to form a landscape to understand, although this might not be the company with the most patents, maybe it's the most relevant, the one that's actually putting this technology to work and a good partner for us. So that's the type of intelligence that we want to try to build for our inventors in that realm. And then I mentioned valuation is another one. The ability to actually come to the table with a reasonable royalty negotiation position based on something other than, well, this other university did that for 2% on net sales, so we want to as well. And we want to have good positioning in our negotiations as a result. So given all those capabilities and things we want to build, we've already been doing some of it. I like to say we're an office in motion. You might have noticed that on my first week here, we changed the name of the office. That was, before it was the UK Intellectual Property Development and Tech Transfer Office. Now it's just the Office of Technology Commercialization. We have new website content, a newsletter. Has anyone received our newsletter? Okay, good, great. If you haven't, you can subscribe. That'll be a regular monthly newsletter with both factual and educational information. We have a new invention management system that we've just adopted. We've migrated all of our data into a new system that'll be much easier to use, we hope. It actually has an inventor portal where you can sign in and you can track the progress of any invention disclosure. You can see where we are in the decision to file a patent, where we are in the patent process, where we are in the licensing process, if it's been licensed, if the licensee has paid us yet, all of that. So I encourage you to go to our website and test that portal out. You can sign in with a Link Blue ID. We have a new invention report form. It is no longer an online portal. It is now a downloadable form that you can save, fill out half of it, send it to a co-inventor. They can fill out the other half, then email it to us. We've got a record of receiving it, and we can start the communication that way. We are building a new searchable technology database. It will be an outwardly facing database of all of our available technologies and available IP for license. It'll be searchable by keyword, semantic information. We're building that taxonomy now, and that's going to be really interesting to help build the ability for partners to work with us. We have a new fellows program. We're calling the OTC Fellows Program. These are students that we're hiring part-time to work with us. Pretty exciting. We have had students from your school actually apply, as well as from other colleges. We're excited about this. We've already interviewed a number of them. We're making a decision in the next week or so to hire at least 2 OTC fellows. Every 6 months, we'll hire a new 2 OTC fellows to work with us. They'll get some experiential learning. They'll do a lot of our market research. They'll help present some of that to inventors. They'll sit in on licensing negotiations. It'll be a really neat program. And finally, education. So new student and faculty education is going to be a big part of what we do. Just about a lot of what I've summarized here, the importance of IP to economic return and back to research. So that's where we are as an office. And I want to stop there. I had a video that I won't play, but we do have actual video tutorials on our website now. If you want to go sort of just see quickly in 3 minutes, where do I click, what do I download, how do I submit an invention? We want to make it as easy as possible. Well, thanks you all. Thank you. Appreciate the time and the comments.